Today's Animal Spirits is brought to you by Nasdaq. Michael, did you know that Nasdaq is the largest U.S. equities exchange by market share? 19%.
I did know that, of course.
You did? I didn't know that.
Now you know.
Okay.
Leveraging its reach, trusted execution platform, and experience, Nasdaq helps with the ETF listing process by delivering a complete ETF ecosystem with deep liquidity, unparalleled marketing tools to activate and amplify ETF issuer brands.
I think we're heading there for more in the future, too. There's a lot of financial advisors who have taken bespoke SMA-like strategies and turned them into ETFs.
Everything is trending towards customization.
Yes. But it's like, take this strategy, we can quantify it, turn it into an index or whatever, and make it an ETF. Nasdaq's experienced support team of subject matter experts are always accessible and dedicated to your needs throughout the product lifecycle. Check out NASDAQ.com to learn more. Welcome to Animal Spirits with Michael and Ben. Michael, last week you and I took a little trip together, and on that trip, we took a romantic carriage ride, just the two of us. I have to say, when we got there, you planned this whole thing out, and I think Josh told you, hey, if you're going to Charleston, you have to take a carriage ride around the city because you learn a lot about it, and it's a cool way to tour the city, which I thought was a great idea by you, great idea by Josh. As you mentioned, Charleston is a city with one of the rare cities in the whole United States with a 100% approval rating.
Yes.
Right? Everyone I talked to, friends, family who've been there before, said, oh my gosh, Charleston is the best. And we agreed. We said dozens of times, like, this city is amazing getting around. So we get to the horse and carriage place, and there's these huge trailers that have benches on them where they can fit, 15 or 20 people for a nice ride. Not us. You decided to go for the more romantic, white satin carriage.
I prefer intimate.
Yes, the two seats on each side. So it was just us, which was great. But we had a tour guide who was a history professor at one of the local colleges there, and she was giving us all the history of Charleston and giving us a bunch of good stuff. And we decided to do some channel checks with her. And she was talking about the local economy, how Charleston has seen massive growth, but they're not building enough apartments, so rent growth has gone up. But all these people are coming there, and stuff is booming. She's talking about the local economy. And I could see the light bulb went off. He said, I'm gonna talk to this person who's not in finance and just ask them. And you kind of said, so what do you think about the national economy? Like, right? You because you never know how people are going to answer. And she kind of looked at us, and I think she was trying to determine, like, what way are you leading me here? And she looked at us, she said, well, geez, I don't know. More people are coming here than ever. People are getting on airlines. The restaurants are full. She said Memorial Day weekend in Charleston was as busy as I've ever seen it. She's like, I don't know. It seems like to me like the economy is doing pretty well. And she's like, is that what you expected to hear? And you said, yeah, that's a good answer.
Great answer.
That's it. It makes sense. So that was our channel check. And yeah, any other parting thoughts? We had a fun time.
Couple of surprises. Well, actually, this is not a surprise. What's your favorite part about Charleston?
Oh man, I don't know. It seems like a very walkable city.
I'll tell you mine. I like that there aren't high-rise buildings. I like that the churches are like the apex of the buildings. So it's pretty hard to get lost because there's.
She told us you can't build a building taller than the tallest church steeple, right? Which seems antiquated, but it makes sense.
So, Ben, we had a lovely day. We took that carriage ride. We did a podcast. We got a drink. And then we went to dinner. Then we watched some basketball. We were on a rooftop bar, and Ben got the absolute worst pour in the history of beer.
Yeah, that was pretty bad.
I've never seen anything like it. So it's just a standard pint glass that was 70% full. It was like, I don't know what happened. It was odd.
It was a Dos Equis, and they put the lime on top, so that made it even more pronounced because you could see that there's this huge gap between the top. Yeah, it was a pint glass, and it was not filled all the way to the top.
Not even close. And I probably would have said something. I almost wanted to say something on your behalf. But did Ben say anything? He did not.
I drank my beer, and we left. I think your martini was bigger than my beer, actually. Okay, so Torsten Slok, Animal Spirits Researcher of the Year. U.S. air travel, no signs of slowdown. You can see that it's basically new records, or it's going to be new records. It's above the last 5 years. He takes us back to 2019, and people are still traveling. I don't. It seems like every plane now I'm on is full, basically.
Tell me about this. I'm not an aviation expert. How do airlines overbook? How is that a thing that's possible? One seat, one person. One seat, one person.
I don't really get it. How people, I'm guessing the cheapest form of plane ticket means you don't get to pick your seat. And it's like they can have those people do bore on the floor to figure out who gets the seat, or they pay them. I don't know.
Fine,
It's a good
but
question.
74 seats in the airplane, whatever the number is, 74 tickets sold. That should be very, very simple. On the way to Charleston, the guy next to me got off, and I took my headphones off, and I said to the lady next to me, "Where's he going?" And she said he got $800 to take a later flight. I said, $800? That's a lot of money. And as a Delta shareholder, I don't know that I like that. I don't know that I like that. And then on the way back home, same deal. They were overbooked and they were offering $800 voucher to travelers that were willing to hop off.
Do you think the calculus could be there that they assume certain people will miss the flight or not make their connection, or what something's going to happen?
I'm sure it's not as simple as I'm making it out to be. But I'm just surprised when you see that happen.
Yes. I'd love to see the cost benefit of that.
And also the pricing of that number, like where does that $800 come from? What, you know what I mean? Like is $575 too low?
Well, don't they start at one? It's like an auction, isn't it? They start at a low level, and if no one takes it, they raise it a little bit. Have you ever seen that happen before?
600, anybody, any takers.
Here's a question for you about travel. I did some notes. Especially for first class people, why don't they tip the flight attendants when they bring them drinks?
Ooh. Well,
I feel like every other time you get a drink or something like this, it's tipping everywhere these days.
Yeah.
Why is there no tipping in? I'm saying not economy class, just first class.
When you walk into a bar, you don't pay $2,200 to walk in. When you're paying that kind of money, it's baked in.
How about this? Because the drinks are free, people feel like they don't have to tip.
There's something to that.
Okay, I just always, it seems bizarre to me because they do. And what percentage of people in first class get a drink? Because it has to be, it's got to be a very high number. I was going to say like more like 80 to 90.
Yeah.
I feel like if you're in first class and it's a drink that's covered, you're getting a drink.
Oh, at least one.
Yes. Okay. Any other travel thoughts? I thought you had some, maybe.
Well, one of the things that we spoke about, and I'm jumping the gun here, but like, how many times are you going to watch anyone but you on the airplane?
That's my first airplane viewing. We'll get to this later, but listen, I'm a big Glenn Powell fan. Okay,
you're trying to corner the Glenn Powell market. I feel like I think you're going to get rug pulled.
Did you see Hitman yet?
Phenomenal.
Okay, we'll get to that in Rex. All right, so I feel like the talking points for the last couple of weeks, because the cycle and the narratives change from week to week on the economy, is, wait, are we experiencing a slowdown here, or is this a normalization? And it's funny because the GDP now thing from the Atlanta Fed, it changes on, I don't know, it seems like sometimes every couple of days, and it went from like above 4% to below 2%. And everyone said, whoa, okay, the economy's slowing. And then it quickly shot back up to 3%. Can you imagine trying to predict economic growth with all this stuff going on right now? And I know it's easy to make fun of economists because they're really bad at forecasting like everyone else, but
isn't this quantitative? Isn't it a model?
Well, yeah, but the model, look at what it says. The range of the top 10 and bottom 10 average forecasts. It's taking forecasts from economists.
Oh, is that how this works? Okay.
Yeah. Wage growth slowed. It's still 4.7% above inflation, but it's coming down. Job openings went from 12 million to 8 million. Credit spread's still pretty tight. I had our chart guy do this, showing high yield versus investment grade versus the 10-year. And I think the average high yield spread is like 5% going back to 1987. It's 3.6%. So spreads are still relatively tight. But I think this is the kind of thing that's impossible to tell whether we're like things are just kind of normalizing and shaking out and whatever kind of landing you want to say, versus like, oh, the economy is actually slowing. I think it's basically impossible to know.
It's interesting you say that, because I was thinking about, we spoke to Kyla Scanlon yesterday about her book, and it's funny how easy it is to debate about what's going on in the economy, because we have the data, right? And now
so much data.
The data is not perfect, but we have so much of it, and maybe we have too much of it. So I think like you can make certain statements. We're not in a recession, right? Like that much is clear. But to your point, it is hard to know, like, how exactly is the economy doing? I think you can make generalizations without really having like it nailed down.
And I've probably said this before, but I would give the U.S. economy the benefit of the doubt. I'd rather sell too late than too early on trying to predict like a recession. Not that I have the ability to predict a recession, but I'm going to give the U.S. economy the benefit of the doubt until it proves to me that I shouldn't.
Yeah, that's good posture.
It's like I feel like it's a momentum thing where I would rather follow that momentum and make sure that trend is clearly broken before I say this is it.
But it's not your job to make economic forecasts. For people whose job it is, being late, once everybody knows, like that's not.
Hey, we're in the takes game here.
Doing your job.
No, we're in the takes game here. There's stuff on the table here.
All right. Well, then in that case, the economy actually is in a recession right now.
Did you see that? God, it pisses me off. The Harry Dent things again, where he said he was out yesterday with a bunch of headlines that the S&P is going to fall 86%. I just want to stop giving oxygen to people like this in the financial media. I know why they do it. It gets clicks. It drives headlines. But like, what do you think this guy's thinking when he puts these forecasts out?
I don't know what his motivations are, but you know the game.
Newsletter
right?
subscribers, I guess.
We're talking about it. People are clicking on it.
I mean, if you're wrong for 20 straight years, and he's even giving dates. He doesn't even know how to be a good charlatan. If you're a really good charlatan, you don't give a specific date. You just say, listen, it's going to crash, and it's going to be the worst crash we've ever seen. And if the crash doesn't happen, you could say, well, the crash is going to be bigger now. Right. You don't say, by end of 2024, the S&P is going to fall 86%. He doesn't even know how to be a good charlatan.
Yeah, I'm with you, man. It's nonsense. All right, this is mildly interesting as we're trying to piece together all of the pieces of the economy. There's some Glassdoor economic research. Employee confidence drops in May. This seems to be trending down a little bit, but I do wonder, you know what? Another nonsense, because this has been trending down since 2022 when clearly the economy is doing well. So
this employee confidence for their own employer, that's actually kind of surprising that it's been trending down for so long, because the whole thing of I'm fine but everyone else is screwed, this doesn't really match that.
Yeah.
Like a lot of people would think like my company is doing amazing, but these other companies are in the crapper.
All right, Ben, there was an article in the Wall Street Journal, The Loneliness of the American Worker. More Americans are profoundly lonely, and the way they work, more digitally linked but less personally connected, is deepening that sense of isolation. Employers and researchers are just beginning to understand how workplace shifts over the past 4 years are contributing to what the U.S. Surgeon General declared a loneliness health epidemic. Among 1-800-FLOWER.com, they have 5,000 hybrid and fully on-site employees. The most popular community chat group offered by the company mental health provider is simply called Loneliness.
I mean, it's not going to get any better. It's just going to get worse, right? Where more hybrid or remote work. I'm sure that's going to be a thing where, and it seems weird to think, because some people just hate their jobs or hate their bosses, but if you have good coworkers, it really can help your happiness. So there was this book called The Good Life. I think I recommended here probably a year ago. It was the authors of the longest happiness research study ever from Harvard. And they actually talk about this. They say like having a work best friend actually can make you happier. So here's what it says. Research has shown that people who have a best friend at work are more engaged than those who don't. The effect is especially pronounced for women, who are twice as likely to be engaged in their jobs if they strongly agree they have a best friend at work. Positive relationships at work lead to lower stress levels, healthier workers, and fewer days off, or fewer days when we come home sad. They also simply make us happier.
What did Chris say a few years ago when we were together? What did he call this place that we work at?
Best friend machine. Yeah, it's right. Yeah, you're like my work partner, right?
Yes, very much so.
This is why we're happier. But this is the kind of thing that's so another Torsten Slok one. He shows a vacancy. Wait,
hang on. I just want to stay on this for 1 sec. If the only way, or if the primary way that you communicate with your colleagues is through a Zoom call,
right? Zoom, Slack,
and you
phone
have
calls, email,
zero small talk. If you can't ask somebody, hey, when did you get to the office? Or any other openers that Ben doesn't like, it's hard to develop
The
relationships.
water cooler talk, yes. And
Yeah.
I think that's the other thing. Everyone hates meetings, but the best part about the meeting for camaraderie is before the meeting and after the meeting. Because there's small talk there and there's small talk here and there's walking back to your desk
Right.
and
That
all that stuff.
ceases to exist on Zoom. And listen, I'm not the most, this might shock you, I'm not the most social person in the world. I'm not a chatty Cathy. But guess what? I love going into the office. Whenever I
also
do,
one of-
it's
I think-
a great time.
Not to pat ourselves in the back, but one of the things I think we've done well over the years is that when we do bring people, because we have, what percentage of people at our company work remotely? 60, 70%?
Yeah, at least.
Something like that. When we get people together, we try to make sure that there's big time, like there's time for work, but there's also social interaction. It's dinners or a baseball game or something, going to the bar, whatever it is, that socializing is part of it. Because that's such a huge part about the organizational culture.
So I think there's certainly many companies that enjoy those benefits of the hybrid that are doing what we're doing. But there's probably there are millions of corporate jobs that don't have any of that, right?
Right.
Where it probably is just really, truly soul-sucking and unfulfilling work. And yeah, there's no way to spin this. This is probably not getting better.
As someone who has worked in his own office, it's literally just me in one office. This has been, I think, 9 or 10 years. I guess it was 2015 I joined. So I've been doing this for a long time. It's really easy to get in your own head when you're by yourself, right? And you don't have people constantly coming around and interacting. And luckily I'm like an introverted person, so it's okay. I can handle it, but I'm sure there's a lot of people who that has to really mess with your emotions.
Mm-hmm.
I'm a robot, so it doesn't mess with me.
Right.
But so Torsten Slok did this office, apartment, retail, and industrial vacancy rates. And office vacancy rates have gone from, 15% to 20% since the pandemic. That seems like a never going back kind of thing. Unless we just take a bunch of these offices down or something. Like, that's not going to get better.
Right. These empty offices are never getting filled.
Right. Yes. And the funny thing is, by where I am, there's all these empty offices. And instead of people going in and retrofitting these, they're just building new ones now. Like, you don't want to go into this old office building that was built in 1980 and maybe redo it, when you could probably just build a new one instead that's nicer and has better amenities.
So things like that, like small office parks and suburbs, like those will just get teared down and repurposed or whatever. New things will come in there.
It's going to take a while, but they should.
City, like, I don't know anything about zoning, but it's not that simple to just convert it to an apartment.
Yes. Right. I'm sure it takes a long time and it's very expensive.
All right, let's talk about interest rates and central bank policy. Here's from the Bank of Canada. With continued evidence that underlying inflation is easing, monetary policy no longer needs to be as restrictive. Recent data has increased our confidence that inflation will continue to move towards the 2% target. Has the global easing cycle begun?
It sounds like it. It's not
Europe
just
too.
Canada. Yeah, it's Canada, and so U.S. will probably be the last one, I would assume, because we have the strongest economy. But it seems like that's where we're heading. I don't know. Do you think they're really going to try to just sneak one cut? Not that I'd want to ever try to predict that, but they'll sneak one cut in this year just to do it.
What do you mean sneak? Like when nobody's watching?
Yeah, let's get one. Get it out of the way.
Well, we've got a Fed presser tomorrow. I mean, I'm assuming they're doing nothing.
Yeah. So there was this chart from Wall Street Journal. This was from Fed Woj. How come he doesn't have a Fed Shams yet as like the offset to him? Right? We only have one Fed whisperer.
By the way, 99.4% chance of no cut tomorrow, according to the Fed Watch tool from CME.
That makes sense. So he created this chart that shows spending, wages, and prices since 2020. And just look at the whipsaw on this thing, especially the spending, with just spending cratered in 2020, obviously, and then pent up demand saw it just jump higher, like out of this world higher. And then it's slowly but surely coming back. But I don't know, just so much whipsaw in the economy. That's just why I'm giving. It's funny to poke economists who have been wrong and say 100% recession. I'm almost willing to give most people a pass for being wrong about the economy for this cycle, because things have been so bizarre.
So it looks like, according to this chart, this is month over month, wages have been growing faster than prices for almost a year.
It's been like 14 months, I think, that wages have been going faster than prices. And I think it was 21 months or something where it was the other way around, where prices were growing faster than wages. So we're making up, but it was still a decent amount of time there. It wasn't.
Here's Neil Dutta, the economist at Renmac. He said there is a potential accident brewing. The economy is weakening at a faster clip than inflation, meaning the Fed won't feel justified to cut rates as much. He quote tweeted that and said either growth is steady and inflation slows, or growth slows and inflation slows. Those are the most plausible outcomes in our view. This may come as the Fed erases cuts in 2024. Buckle up.
So both of his most plausible outcomes are inflation slows.
Either growth is steady and inflation slows, or growth slows and inflation slows. I wonder what he thinks the accident is. Not cutting?
Could be where the Fed, yeah. But that does seem like the Fed is momentum players where they're probably going to be too late. Like, don't you think of the next 3 years, if something breaks, we're going to get like a 75 basis point cut at some point where the Fed's like, whoa, we were way too late.
What's the logic behind not cutting?
Everything's okay. Nothing's broken yet.
But why be restrictive then? I mean, how long has the Fed funds rates been above inflation?
Yeah, for a long time. My whole thing is,
so why leave it there?
That's a good question. I think my thinking is if they cut 50 or 100 basis points and the Fed funds rate is still above 4%.
Does it really matter?
Yeah, isn't that still that's still above the inflation rate? I don't know. All right, here's the people who would be mad about that happening. Income. Americans have more income than ever before. This is from the Wall Street Journal. In the first quarter, Americans earned $3.7 trillion from interest and dividends, up roughly $770 billion from 4 years earlier. So this is a record. This is all income, dividend yield, all that stuff that they get from their investments, which Josh has been talking about for a while, saying this is just putting more money into rich Americans' pockets and helping them continue to spend money. I always love the Wall Street Journal interviewing regular people, right? This person who's 55, Victor Hernandez, him and his wife, higher prices caused them to slow their efforts to buy a new car and potentially improve their backyard patio, but they still had money because they have 1/3 of their portfolio in fixed income and their stock's doing well. So they're planning trips to US and Spain and catered meals for family get-togethers. So this is the kind of trade-off that makes sense to me. Like, geez, buying a new car seems crazy. I'm not going to do that, which is something that you've decided too. And the inflation on renovations is up, but I'm still going to take a trip and I'm going to have family get-togethers. And like that's the kind of substitution I like to see in an inflationary world. That makes sense. He also says, recent stock gains and bond income have put him in a better position to achieve his goals of retiring early and helping his 2 boys buy future homes. I'm not going to die and take the money with me, he said. I think there's going to be polar opposites of, we've talked about baby boomers before who just won't spend their money because they've saved and saved and saved and it's hard to turn that dial. I think the other side is going to be, I'm not going to bring it to the grave with me. I'm going to spend it all. Well, whether that's on my family or friends or myself, whatever it is.
Didn't we talk about this at some point last year that a lot of the millennials buying homes, part of the down payment was coming from their parents?
Yeah. It makes sense.
Makes a ton of sense.
Yes. All right. So Sean, a research analyst, sent us this one. This is surprising to me. From the bottom, which was mid-October 2022, the bottom of the bear market, S&P and EFA, which is foreign stocks, developed foreign stocks, are basically up the same. They're both up a little over 50% from the bottom. This was surprising to me. I would not have expected this. And this is, I don't know who did this one. Can't remember where I found this. Probably the Daily Chart. What's the newsletter called?
Daily Chart Book?
Yeah. So this is from the Daily Chart Book. So I didn't realize there was a Magnificent Seven of non-US stocks. Did you know this? We got to put a label on everything these days. And since January of 2022, the Magnificent Seven outside of the US has outperformed the Magnificent Seven in the US. So it's Novo Nordisk, ASML, SAP, Toyota, HSBC, Siemens, and UBS. I don't know. That seems like a stretch to me to call that Magnificent Seven.
I'm sorry. Toyota? Come on.
I was looking at like HSBC and UBS. I feel like the committee who came up with this label had to think long and hard about who do we take here. Right. But anyway, so that surprises me, though, that foreign stocks are doing so well relative to the US. I don't think anyone would have expected, especially since the dollar has remained relatively strong. It's not like the dollar has weakened causing foreign stocks to really give them the boost, especially for Americans.
I saw a chart from Mike Sicardi via FactSet looking at the earnings sentiment of the S&P, Europe, Japan, and EM.
What's earnings sentiment like from analysts?
It's upgrades minus downgrades.
Okay.
And it's turning higher, significantly higher, except for the S&P, which is interesting. But in emerging markets and Europe, yeah, it's had a nice run.
All right, because they kind of had a slowdown before us, right? All right, I remember you did a post a number of years ago, the CAPE ratio, like why are valuations higher? And you compared like employee revenue or profits, whatever it was, probably revenue per employee of Facebook versus US Steel.
Yeah, that was a long time ago. That was probably like 2015.
But whatever the number was, US Steel had, I don't know.
I think it was like $400,000 in revenue per employee, and Facebook had like 37 million or whatever the number was.
All right, so Charter did this graph where they looked at market cap per employee of the biggest companies. And Nvidia has a little less than 30,000 employees, $3 trillion market cap. Back of the envelope, we're talking more than $100 million in market cap per employee. The next best ones are Apple and Meta, which are $19 million per employee. Nvidia just blows these out of the water.
So that's obviously an all-time record. $100 million per employee?
Has to be.
Yeah.
This probably can't be a close second. And these other ones aren't even in the same ballpark as Nvidia. All right, I got one more anecdote from a person. I still don't understand how regular people will share their investment strategies and blunders with the financial media. I don't know. I guess everyone wants their 15. But if you made a huge investment mistake, which you've written a book about before, the biggest investors and the biggest mistakes, would you want to share it with a financial publication?
Probably not.
So I don't know how you lose money in real estate, but Bloomberg has this article on syndicated real estate deals. Do you know much about these?
Mm-mm.
So, not that I have any personal experience with this, but syndicated real estate deals are essentially, we're going to pool a bunch of money together from regular rich people and buy an apartment or commercial real estate or something like that, right? Like, so multifamily housing, that sort of thing. And they interview this woman. Lynn Nath was growing tired of the meager gains from her family's retirement account. In late 2021, she invested $200,000 with a company that was making 30% returns by buying the hottest ticket in global real estate, U.S. apartments. Now she says most of that money is gone. She's a business school graduate who invested earnings from her husband's dentistry practice, and the personal loss is a calamity. So they show this chart here, like how retail investors lost, and they basically what it boils down to is tons of leverage. The apartment, like they overbuilt the apartment, so it goes down a little bit, and all of the equity's wiped out because they just levered it up. So obviously, if they were showing 30% returns on these previous deals, it was a ton of leverage that made it happen, not any smart investing or whatever. So some of these, things blew up. So she says, "I feel guilty with my own stupidity," and then they end the story saying she's now watching her portfolio for more trouble. She said she's invested more of her husband's 401k an additional $1 million with other real estate syndicators.
Oh boy.
Didn't learn our lesson. So here's my thinking about getting rich fast. Like since 2009, the S&P is up 14 and change per year. Same thing over the last 5 years. We're talking like 14% returns. I just can't imagine living through one of the greatest stock bull markets in history and thinking, nah, that's not good enough. I need more. I guess that's just what happens in bull markets. And they say the reason that they're behind is because they put 4 kids through medical school or something, which just I can't even imagine. But I guess my one rule of thumb for avoiding like big investment mistakes is like if it sounds too good to be true, it is. Like someone's promising 30% returns, there's something wrong there.
Yeah. Yeah,
Right?
if 30% returns can actually be had, it wouldn't be going to you. No offense, whoever you are.
Yes, right. But I think if you're someone who has a little bit of money, you think like, well, it's just us handful of millionaires who are doing this. There has to be this like secret side door for us. Sure, not everyone else can access it, but we can.
Right.
But yeah, and they interviewed one of the guys who actually was part of the deal, and he said, "Listen, this was a perfect storm, blah blah blah." But it would be weird telling people I lost all of my money in real estate during one of the biggest real estate booms in history.
Tough.
It's possible.
Tough scene. All right. Options activity is going crazy.
Yeah, the Wall Street Journal had a piece on the Degens, which I guess is like a loving phrase now. I don't know. It's not a put down anymore.
No.
But remember in the pandemic, people thought, well, you can't gamble on sports anymore because there's no sports going on right now, which I still can't believe was a thing that happened. That just sports just stopped completely. How long was it? I don't know. 6 months or so. We just literally had no sports. I feel like I've blocked a lot of that out of my memory. But the thinking was, well, people are messing around on Robinhood and they're trading options because there's nothing else to do and they're bored and they're sitting on their couch at home. But Wall Street Journal shows average daily options volume and the percentage, which is just continued to skyrocket, and the percentage of U.S. trading stemming from penny stocks, which went from less than 2% in 2016 to 15% now.
Wow.
So this stuff is just not going away.
I think I was pretty right about this. I was of the opinion that people don't get unaddicted. And I said that whatever they're trading, if it stops working, they'll find something else. And sure enough, that's what happened.
And the thinking was the bear market wiped this out, would wipe this behavior out.
Nope.
Because so much of this stuff, crypto and growth stocks, growth tech stocks, we had stuff fall 70, 80, 90% in cases. And it must have been like, okay, that's it. It's gone. And it's not.
Nope, not gone. Addiction.
I think the ease of access is part of it too.
It's the phone. It's so damn easy.
Yeah.
Swipe
really
up.
Is.
All right, we got an email about Costco. Kirkland brand, we're talking about inflation now. Kirkland brand flushable wipes are on sale at Costco. I've been coming to Costco at least twice a month for the past 5 years. And I don't think flushable wipes have been on sale more than twice in 5 years. All of the prices for everything are coming down, and it's very clear the show is not over, but it is ending.
That's a person who has a budget right there.
Another chart from Yardeni corroborating that small business planning to raise prices leads CPI by 6 months. So this chart shows the small business survey. Are they planning on raising prices? And that is going down in the right direction.
Rolling over hard, huh?
Rolling over hard. So another feather in the cap of people who say that peak inflation is behind us.
That's a pretty good chart.
Know what else is behind us? Insane car prices. Bad for me, good for you. Wes Lutz.
Worst trade of your life, that Audi.
Worst trade of my life. This is an owner of a Dodge dealership in Michigan. Oh, Ben, right in your backyard. Had several Dodge Challengers and Chargers that were eligible for $11,000 discounts.
Do they still make the Dodge Stratus?
I don't even know.
Do you think Will Ferrell put that out of business?
Dodge Stratus. What is a Dodge Stratus?
It's like a little sedan. But I feel like Will Ferrell single-handedly put the Dodge Stratus out of business.
Why? What did he do?
I drive a Dodge Stratus. You remember that one?
What's it from?
SNL.
Okay, no, I don't. But
they're all fighting at the dinner table, and
last night
I'll send it to you.
Last night I had trouble sleeping, so I put the tube on, try and knock me out. I turned on the movie from the early 2000s called Kicking and Screaming with Will Ferrell and Robert Duvall that I've never seen.
Not great, right?
Horrendous. Holy shit.
The premise sounded great. It's a good premise. He is a dad who coaches little kids soccer, right?
Yeah. Stunning. I'm at a loss of words. Just really bad. Really, really bad. All right. Anyway, back to the car dealership quote guy. He said, it seems like we may be headed back towards incentives and overproduction. He said, it may not be good for me or for the manufacturer, but it sure is good for the consumer. And in the article, they said among the most heavily discounted cars are electric vehicles. So the next chart from Sherwood shows that Tesla produced 47,000 more cars than it delivered in Q1, which goes back to 2019, by far and away a record. Not great. And the stock looks like crap to boot.
So I saw one of the Cybertrucks in the wild the other day at the grocery store.
So did I. Horrendous looking, right?
I mean, it's awful. But I almost, here's the thing. And I saw a funny tweet about it saying that like there's only been 3,000 sold. And it's like, if you see one in your town, you know that that's like the biggest dipshit in your town who's driving it.
Yeah.
Which I feel bad. But so here's my competing thoughts on this. Like it obviously, it looks awful. It's just terrible looking. just like you see it and you want to laugh. But you know how they always have the car shows where it's like, here's the futuristic version of this car, and then they never produce them. They finally produced one of them. So actually, even though it looks horrendous, I give them credit for actually producing the futuristic looking car, even though it looks like something people in the 90s thought a car should look like in the 2020s.
Yeah.
So it's like they went for it. Like,
Yeah.
I give them credit for at least going for it.
I don't love to judge people by their cars, but let's be honest, I kind of do. So what does that say about you if you're driving, and I hope none of our listeners are driving a Cybertruck. You might be a lovely person, but it says something. I'm not sure it's a great thing.
I'm a tech person with zero self-awareness.
I'm extremely insecure. Look at my car.
I don't know. You're going against the grain if you're buying one, but hey, more power to you. Drive what you want. If it makes you happy, just like you when you get your Porsche in a couple of years.
Lance Lambert tweeted, I'm not getting a Porsche. That's not a thing.
But if you're going to get your midlife crisis car, a Porsche
I'm too young. Stop saying that.
You've been
39.
going through a midlife crisis for 4 years. But here's the thing, a Porsche is your safest bet. Like, I don't think people who drive Porsches get made fun of. If out of all of those cars, that if you're going to be one of those guys, a Porsche is your safest bet. That is right?
Well,
that's a T-bill of midlife crisis cars.
When I saw another Porsche this week, and I thought what I always thought, that's a great looking car.
Percentage of people who are bald who drive Porsches. It's got to be a high percentage.
How much? Yeah, probably. That's fair. How much do you think a Porsche costs? Like, what's a monthly payment on a Porsche? I have no idea. Is it $3,000? Is it $5,000?
I would guess 5 and up. 5 is like the baseline, probably. Don't you think? when you put it that way, it's like, yeah, a mortgage payment or a Porsche.
Yeah, it's
or,
tough.
You know,
it's a tough choice. Okay. Speaking of mortgage payments, Lance Lambert tweeted a 7% mortgage in 2024 is like a 15% rate in 1982. When accounting for U.S. home prices, home insurance, incomes, property tax, and a 10% down payment, housing affordability in 2024 is similar to 1982. And I know we're beating this dead horse, but this is, I'm not sure if national crisis is too strong of a word, but it's fucking bad. It's really bad. For first-time home buyers.
I hate to keep pounding this drum, but it's been this way in other countries for years. Like, we're probably going to get worse. Like, Canada, France, Italy, all these other countries are worse than we are.
All right, so what? And?
I wish I had an easy fix. My dad was talking about it this weekend. He goes, is there any fix to the real estate market that you can see? And I said, if they build 1 million homes a year for the next 10 years, that'll probably do it, which is, I guess, just never going to happen because we don't care, I suppose. So my point is, unfortunately, it's not going to get better. That's the only fix I can see. And so this is from Bloomberg. They say the cost of home ownership jumped 26% since the pandemic. And now they're looking at taxes, insurance, energy, maintenance. And they say this number went up to a total of over $18,000, which is about $1,500 a month. And they estimated it at like 2% of the value of the home. And a lot of it is, they say maintenance is the biggest piece just because costs of everything have gone up to keep your house in line.
It's too expensive.
Does that seem higher? Does that seem high to you? They showed across different states saying that it's obviously higher in certain areas. More people have to shop around for insurance like me. They need to get a broker. But I think this is, I've always heard 1% to 2% value of the home for ancillary costs. This is the thing that people never take into account when they talk about home ownership.
What's baked into that?
Maintenance, taxes, insurance, utilities.
I'm just trying to think of my house. 2% sounds, does that sound?
It seems high to me.
Oh, does it?
My taxes in Michigan are my taxes and insurance are relatively low compared to the rest of the country, I would imagine.
Yeah, not mine.
Yours are probably higher.
Oh yeah. Mine's definitely higher than that.
I would have to add them up. Okay, so you talked about how, what do they say, this is 1982 levels? Today is like 1982. There was this guy who wrote an op-ed in the LA Times about California, homelessness, and like the housing crisis there. He says, in 1981 at 24, I bought my first house at a price of $70,000. It cost less than 3 times my salary. which is roughly median at the time. If adjusted for inflation, the home's value would be $218,000 4 decades later. Instead, the house is $580,000. We talked about this a little in Charleston when we were walking around, because they were telling us the values of some of the homes there, and it was just an ungodly sum of money for a lot of those to live in a nice place. I do feel like a light switch was hit at some point where people realized, oh, maybe real estate in nice areas should be more expensive, or more people are flocking to these areas and buying them up.
So is the take that real estate has always been undervalued?
I think you could probably say in the 80s and 90s it was undervalued, but it probably deserved to be, because let's be honest, the houses back then were not very nice.
Okay, counterpoint. How can we say that real estate was undervalued when it had one of the biggest crashes in history?
Okay, well, I think we can say in the 2010s, the real estate was historically undervalued. How about that?
Fine, yeah.
Based on demographics. Yeah. And this is the thing, it's not, I think the 2030s could offer at least a slowdown in this stuff. If I'm not necessarily predicting a crash, but there's going to be some houses hitting the market from boomers dying off. I don't know how that will impact prices.
That is the coldest hot take I've ever heard.
What do you mean?
Boomers will die and some of the houses will hit the market.
It's true. 70 million boomers, they're
yeah, no, of course it's true. Yeah.
Father time undefeated. All right, this is interesting on private markets. It was mentioned on the podcast that if these private credit deals were public, they'd be down 60%. I don't think we necessarily said they'd be down 60%. We said some of them would be down more than they would be in certain instances. We're not like predicting private credit should crash.
No, I'm not.
However, there are public BDCs holding very similar deals. BXSL has a 30% position with BCred, and these trade in a healthy way. This perplexes me to no end. What is your opinion on this paradox? This person is basically saying, like, why aren't these BDCs down more? And I don't think we're even saying like a reckoning is here for private credit yet. We're just saying that like when the reckoning comes, you won't see markdowns on the private stuff like you would if it were public.
Why are you saying when the reckoning comes? You think there's going to be a reckoning?
Oh, I don't know. There has to be. There's a reckoning in everything.
Okay. All right.
I don't know. Anytime money comes in to something like this, there has to be a reckoning, right? No?
I don't know. There has to be.
Okay. Well, we recorded a podcast yesterday that's coming out next week, I think, all about private credit for Talk Your Book. So I think we go through everything. All right, I have a
anyway. To answer this person's question, I honestly don't know enough to answer this question.
Yeah, and I honestly don't follow the BDCs either, but I thought it was a legitimate question. I have a bone to pick with a colleague of ours, Nick Majuli at Dollars and Data. Is maximizing credit card rewards worth it? And he kind of makes the point, which I think a lot of personal finance people make, like just the cost benefit analysis. Like, is this worth my time and energy? Right? And Nick says, like, just, pick a card that pays you back 2 or 3% and get on with your life. And don't do the game where you're constantly looking for stuff. And I don't know. I still think it's worth it every once in a while to play this game. I probably play it once or twice a year, maybe.
What do you mean? How do you play it?
I look for big sign-up bonuses. If I'm going to be spending money on something, hey, we're buying some new furniture or something, like I know I'm going to hit that minimum threshold, I'm okay doing the sign-up bonuses. I mean, I don't know. I think about it. You get upgraded status for flights. Like I got a Delta card and I got enough miles for spending, so it took me from silver to gold or whatever it is. So you get upgraded status. You get more miles for you get. I think with my Delta card, I get 1 free airline ticket a year for companion fare, free hotel stays with a Marriott card. I think we've basically paid for 2/3 of trips to Marco Island at the JW with our Marriott card a few years ago. Probably doesn't do it anymore because it's so much more expensive now. But we probably paid for 2 just through sign-up bonuses alone. You get cash back. This is the big one for people. You get better credit score if you have more credit taken out. So I think for me, we're talking tens of thousands of dollars over the years in benefits and cash back. And I think it is worth it for people. And I'm not one of these people who will go to the websites that like, how do you use your miles better to find this flight or that flight? But I think I haven't spent a lot of time on this, and it still has made me tens of thousands of dollars over the years.
Yeah, no, I'm with you.
Not a lot of work.
I'm not a hacker. I actually did listen to Chris Hutchins' podcast, All the Hacks, with somebody who was an expert on juicing the miles and
I don't go that far.
And I thought it was interesting. And they get a lot of value out of it, but they do put in the work. I don't put in the work, but even just having the Sapphire Reserve, I can't tell you how many free flights I've gotten over the years. And if you're going to be spending the money on a credit card, you might as well get the rewards. No?
Yeah, and I get the TSA pre-check paid for. I get the Clear paid for. I don't know. I get the Walmart Plus paid for. You pay the whatever $500 for the annual fee, and it probably a lot of that stuff washes out. But I think it's worth it.
Well, you know what else? I get a lot of joy from, even if it's an illusion that you're paying for it in hidden fees. I still get that, what you call psychic income. Is that psychic income?
I think so.
Okay.
It's like, it's one of those things where you feel like you're taking advantage of Wall Street for once, or the financial firms. It's like, listen, they're paying me to do this.
Yeah. All right, Ben, I want to ask your take on this.
Okay.
We got an email from a young person in the industry. I think they're a CFP, asked for career advice, and I told this person to call me, which is something that I do frequently. Gave them my phone number. This was on Saturday at 10 in the morning. Now, if I was and then I emailed that person back at 10 o'clock on Saturday. If I was in this person's shoes, I would respond right away. Oh my God, thank you so much. I'm excited to talk to you. Right? Because we're always hiring. We always have a stable of people that we're talking to. Even if there's not a fit today, you never know, right? It's a small industry and whatever. Always looking for good people. The person didn't get back to me until Monday at 3. Now, I'm going to talk to this person, but I'm much less enthusiastic than I was when I got the email. So I'm already going in glass half full. So this is just a PSA. Don't do this. Am I wrong?
So you wanted them to write you back right away.
This person's a kid reaching out to somebody that they respect about, and I gave him my phone number and I said, call me anytime. And it took him 2.5 days to respond. Seems weird.
What if he got bad advice from his friends? Like, remember in Swingers when they debate when Mikey should call the girl back? And they say like, no, you call her in like 3 days. And then Sue and Trent say, actually, we call him back in 4 days or whatever. Maybe they got bad intel from someone who said, like, when I don't want to seem too excited, should I write him back right away? And his friend said, no, you can't do that.
Okay.
Maybe wait too.
That's clever, but I just don't buy it.
True.
But right, like there could have been a world where this person emailed me back. We had a great call, and I offered him a job. Now unless he blows me away, which I'm guessing he's not going to, I'm already out.
I think we can say one of Michael Batnick's biggest areas of pet peeves is email etiquette. You're a big email etiquette guy for timing and when to respond and calls.
It goes beyond just email. I'm a life etiquette guy. Do the right thing.
Yeah,
I'm not saying I always do the right thing. I make plenty of mistakes, but in this situation, it's just very easy to just respond back.
I would try to give this kid the benefit of the doubt and say maybe some people just don't check their email very often, but if it's a young kid, they're checking it all the time.
Come on.
True. Okay. Recommendations. Yes, I did watch another Glenn Powell movie on the way down to Charleston.
It's not even a good movie. Like,
it's a good airplane movie.
Is this your third time watching it?
Second time, I think. I don't know. I also watched A League of Their Own on the way home. I couldn't find anything else. Just Tom Hanks just cooking.
Can I tell you something? I don't think I've ever seen it in full.
Really? Okay. It aged pretty well. And man, Gina Davis was so good. Whatever happened to her? She was amazing. She was so good.
Favorite Gina Davis role?
You know what's an underrated one? A Long Kiss Goodnight with Samuel L. Jackson.
Love that one. That's what I was going to say.
Were you? That's a good movie. All right, so I watched Hitman with Glenn Powell, and
Did you watch it with Courtney?
No, but she got mad at me because I cheated on her, and I watched it by myself because whatever. We had busy stuff, and she went to bed early. I stayed up and watched it. And
what genre is Hitman for you?
Here's the thing. It's two different movies in one. The first half of the movie is a comedy. The second half is like almost like a noir. I'm trying to explain, it's
not a rom-com. I would call it a rom thriller.
Yeah, but it is two different. Like the first 45 minutes, you're kind of like, what's going on here? And then the second half, the movie completely flips, and it's a totally different movie. Now, if you wanted to, you could nitpick some of the parts of the plot are absurd. I really, really liked this movie. It's just a fun movie. It felt like a little bit of throwback. I thought it was great.
I agree. It was great.
So I was thinking, Glenn Powell is our only male movie star under 40 years old.
That's not true.
like movie star, not actor, like movie
All right, so
star.
Chalamet's an actor?
Chalamet he's not a movie star. He's an actor.
Okay.
You could say Gosling. Gosling's like mid 40s. But Glenn Powell is like our own. I mean, because all the other actors coming up are British or they're.
So
like,
he's the only American movie star under 40? Male?
He's like our only chance for like a poor man's Tom Cruise. Like I think Glenn Powell could be a poor man's Tom Cruise.
Yeah, he's good.
Don't you think you could see Tom Cruise playing that part that he played? So I like this movie so much. I read the movie was based on an article from
You like this movie so
2001.
much, you went to Glenn Powell's house.
Yeah. So I read the story about the hitman. So the first half of the movie is based on a true story. Like there really was a guy who did fake hitman calls for the police. And then all the stuff about him getting involved with one of them, that was like the embellishment. But this is interesting. So I read this story about it, and they interviewed this guy who sounds like just a total character. And it says, in the late 90s, fewer people were looking for a hitman, a phenomenon that Johnson, that's the guy's name, Gary Johnson, attributed to the economy. When the economy is good, as it was then, people don't get so frantic. But when it starts going bad, as it's doing now, and this is written in 2001 after the dot-com bubble blew up, everybody gets a little bit crazier and starts thinking about knocking someone else off. Sure enough, in the past 12 months, his workload has returned to normal. So during a recession, more people would like to kill someone using a hitman than during a boom time.
Sure.
So right now, this is why murders are dropping probably, because we're in boom times.
Yeah. A lot of the motivation for taking out a hit is insurance money.
Yes, that always seems to be the case. But did you get the part of the movie where they said like hitman aren't real? Like it's just a fabrication of movies?
Is that true?
Do you believe that? I don't know.
Kind of.
I kind of did too.
When they said it, I was like, oh yeah, that makes sense. What? I've never met a hitman.
Yeah, like if a hitman did exist, do you think it'd be easy to find him?
Craigslist?
Yeah, I don't know. All right. What else?
Anything else? All right, on the airplane, I saw a great one. Land of Bad. Russell Crowe, who looks a little bit different than his Gladiator days. Let's just say that.
That sounds like a straight to DVD kind of movie, if that was such a thing anymore.
Land of Bad. I think it did well. I mean, it was good. 64% of Rotten Tomatoes. It's perfect. That is my.
It's got one of the Hemsworth brothers in it.
That's my sweet spot. 64%. Oh, 94 from the audience. See, that lines up perfectly. So here's the plot.
How did Russell Crowe get to the point where he's doing a movie with two of the Hemsworth brothers who aren't even the guy who plays Thor?
There's two of them in here?
That's what it says.
Liam Hemsworth?
And Luke Hemsworth.
And Luke. Huh. I didn't even know there was more than one. All right, anyhow, Russell Crowe plays a drone operator. And he's communicating with a couple of badasses that get into trouble. It was good. Good airplane movie. Very good airplane movie, in fact. I wouldn't watch it at home, but...
Okay. A junkie action movie. So my son is addicted to junkie action movies.
Do not show him
this in
this.
Here?
Don't show him this because it's pretty violent.
Oh, no. He watched this twice.
Shut up.
No, sorry, not... No, this you put in here, Under Paris.
Oh,
you said this is the #1 movie on Netflix?
All right, so Under Paris, before Hitman came out, was the #1 movie on Paris. And I feel like I should take a victory lap here because let me read you the blurb of Rotten Tomatoes. To save Paris from a bloodbath, a grieving scientist is forced to face her tragic past when a giant shark appears in the Seine, which is a river in Paris. Did they not write this exactly? If there was like a Michael AI movie writer, this would be the movie.
So did you watch this?
Of course I watched it.
Awful. Terrible.
Really bad.
Just, my son loved it.
Did he? It was really bad. But I will say, some of the shark kills were really good. Like some of the best shark
he just kept being like, Dad, watch it. This guy gets eaten in half here in two pieces. Some
really good shark attacks, but it was a horrendous movie.
So my son is totally screwing up my Netflix algorithm. Every time he watches a junkie movie like this, he hits I love it. And so then he watched, you know what we watched last night? That was just, I didn't want to watch it because it never should have made. They did Independence Day 2.
Never saw it, never will.
Independence Day, about as bad as you'd think it would be. Just really, really, really bad.
Oh, I can't imagine. So we were going through Robin's grandmother's house sold. So we're cleaning it out. She passed away. And there's just boxes and boxes. Robin's family keeps everything. So we're going through boxes. So I saw one box that said memorabilia on it. So I opened it up, and on top I see Man on the Moon, like from the full newspaper from 1969, very nice, intact, perfectly. So I'm like, oh, let me see what else is in here, and it's just like cards and envelopes and empty cards. Literally, I would never.
You're gonna frame the man on the moon thing. You sent us a picture of it. That's an amazing keep right there.
Yeah, I'm gonna frame that. So as I'm going through the box, it's really truly the definition of all garbage. When people took vacations back in the day, they used to send postcards.
Oh yes.
Right? Like, hey, I'm in Bermuda. We got here yesterday and we're having so much fun. The weather is great. See you when I get home. Like that was the thing that people did.
So there's a bunch of postcards in there?
Oh my God, hundreds.
Okay.
Happy Valentine's Day, Bubby.
So wait, how did the sale of her house go?
So she lives in an area that has turned very Orthodox. And so, boom, like
Immediate.
Yeah, immediate. Yeah. All right, Ben. Did we have fun in Charleston sharing that coconut cake? Was that delicious?
Not bad. Yeah, we did have fun.
I tried
that's a fun place.
I tried to turn you on to espresso martinis. You wouldn't have it?
No. Gross. Sorry. It's never going to happen. My wife likes those too. It's never going to be me. All right. Send us an email. And if you do send us an email and Michael responds to you, hit reply back immediately.
If I give you my phone number, say thank you.
Animalspirits@thecompoundnews.com. See you next time.